y'all, welcome back to my channel. This is just Jaleesa Renee, all things entrepreneurship and faith. Okay, because over here we're gonna praise Jesus. We're gonna praise Jesus all day, every day, and ain't gonna be ashamed about it. Go ahead and give him some praise. Okay, this video is going to be about trading and how to determine your major versus minor support zones. If you're a new trader or if you're an experienced trader, but you just, you know what I'm saying, kind of a little rocky on determining your resistance zones, today I'm going to break down 8 different ways that you can determine a major versus minor support or resistance zone when you are marking up your charts. So this is first things first. When you're trying to determine resistance zones or resistance levels or key levels, however you want to say it or put it, the main thing is assessing what's happening at these levels, okay? How can you determine where price is going to go based off of previous data? So there's a few different factors that go into that, and I'm going to use the next 10 to 15 minutes to discuss how you can better pinpoint these levels and what to do when you get to these levels to determine what to do next, okay? So let's get more into the video. Price history. First step is to look at past historical data to analyze that data and determine where significant levels are that have shown previous either strong support or strong resistance. You're going to look for areas that you see where price has either bounced off or reversed off of. Those are areas that you're going to want to mark up as a key level starting on the higher time frame. And what I mean by the higher time frame is going to be your weekly, your daily, and your 4-hour time frames. Okay, you have to start on the higher and work your way down. So with that being said, if you're on the weekly, the daily, or the 4-hour time frame and you see that price comes to a certain area multiple times in the past, and I mean recent past, I would say, you know, go back a few weeks, a few months even. If price continues to reach a certain level, whether it be support or resistance on the higher time frame, that is going to be a key major zone. So you're going to mark that up, and then you can shift and make your way down to the lower time frames to locate your minor zones and your better entry if you are looking to enter a trade. Psychological levels. Oh my goodness. When I tell you, when you learn your pair and you learn where that pair's psych levels are, that will, oh my gosh, that will like catapult your major and minor resistance zones. And you will also notice that the psych levels for each pair will coincide with a major or minor support or resistance level. They should add up, they should match up, and it's not because just coincidence, right? So the reason why your psych levels are going to line up with your major or minor support levels is because that is a key area to where people are looking, right? Banks, retail traders, hedge funds, whatever, you name it. Reach these certain levels to see how price is going to react. Are people going to pump it or are they going to dump it? Do they want to drive price up or do they want to drive price down based off of that level? Okay. So when you're looking at psych levels, you want to ensure, all right, you got to make sure that the numbers are rounded. So a psych level is not going to be 33, 183 or, you know, 35, 266. That's not how that works. If it is a psych level, you want to round up to the nearest whole number, okay? Round number, 50, 60, 100, 20, 10, 33,000, okay? It needs to be ending in a round number. That is very important, okay? The reason why these levels are so important is because these are the levels that entice buyers or entice sellers. So sellers and buyers are waiting to see, is price going to go to this level? If so, I'm going to get in for buy to drive the price higher. Or I don't want price to go higher. I'm thinking it's going to go lower once it reaches this certain level. So buyers and sellers are always on standby looking for these cycle levels. So it's not by coincidence that you see price spike up to a level, reject, and reverse, or spike up to a level, retest that level, and continue up. Depending on what the cycle level is and what the pair is, you can safely, make an educated guess, because that's all trading is. Trading is just educated guesses. Next up is going to be trend line support. When you're first learning how to trade, you're gonna learn trend lines. Somebody's YouTube or somebody's course is going to teach you trend lines and how to properly place them on your chart. So how this is important is you're going to determine first what trend you're in. If you're in an uptrend, for example, you should see a pattern of higher highs and higher lows, higher highs and higher lows, right? Now where it gets good is where those trend lines intersect with the current price. Will let you know if this is a point of interest. This is going to be a support zone. But the key to this is determining the time frame. If you're in a higher time frame and you're in an uptrend, that holds more weight and more value than, let's say, a 5-minute or 15-minute time frame of an uptrend, because that can swing and reverse within a higher time frame uptrend. So if you're on the daily and you're making higher highs and higher lows, higher highs and higher lows, and you drop down to the 5-minute, you're gonna see, high, low, higher high, higher low. It may reverse and then continue up and then reverse back down. So keep that in mind when you're drawing your trend lines. It is very important to notate what time frame you're on, because that will determine if it is a major or minor support or resistance zone. Next up, we have moving averages. Now, everybody knows about moving averages. So, whichever one you want to use is up to you. What I'm going to suggest is how to use those moving averages. So, the best moving averages to start off with to determine trends, okay? Support and resistance. Where are we at? Where is price going? It's going to be your 50 moving average and your 200 moving average. Now, how these can be of importance to you and your trading skills is when you put these moving averages up on your chart and you see that price is bouncing off of that moving average, it's respecting the moving average, that is an indication of a support or resistance area. Okay, so next up is one of my favorites. I have grown to love Fibonacci retracements. Y'all, when I first started trading, I was like, you know what? I'm not about to do this because it's too many lines, it's too many numbers, it's got too much going on. I don't want to do it. I don't want to learn it. I don't really care. But let me tell you, I learned Fibonacci retracement. And let me tell you, it has helped my trading tremendously, y'all. And I'm gonna tell you why. You're gonna look for your swing high or swing low depending on the trend that you're in, right? So once you determine that, you're gonna draw your Fibonacci retracement and you're gonna look for key areas on the retracement. And there are 3 zones that I specifically pay attention to on any Fibonacci I throw up on my chart. So those levels are going to be your 38.2%, your 50%, and your 61.8% levels, okay? Now, how this is important is price typically, and you have to look back at past historical data, but price will typically either go up to one of those areas and bounce off, or go up to one of those areas and continue. Fibonacci is very useful because if used correctly, the key word being if you use Fibonacci in confluence with other, indicators that you have, your bias, it can really make for a solid trade. And how you can use this is determining take profit zones. All right, so the next one is going to be volume profile. So how you use volume profiles is all you're going to do is analyze certain areas to where there is a lot of liquidity, a lot of money being put into the market. Now, you're probably wondering, well, how do I determine what is a strong volume profile? Well, I'm going to tell you. What you're going to do is you're going to look at the volume profile to identify and locate spikes or clusters that are higher than normal. That will indicate that it has a strong liquidity zone and that there's a lot of money being put into the market at that specific price area. How this can help you is this will give you more confluence on if this area is significant to buyers or sellers. You'll look at the same area on your volume profile in confluence with your Fibonacci, your trend line, your support and resistance on the higher time frame, and your psych levels. Now, where the going gets good is time frame confluence, right? So let's say you're on the weekly, the daily, the 4 hour, and all of your key levels line up. You're gonna then drop down to your 1 hour and 30 minute, even possibly the 15 minute, depending on what type of trader you are. And if you're noticing that these same areas are respected on multiple time frames, that indicates that that price, that specific zone, is of high interest to either buyers or sellers. Price always respects or rejects that area based off of previous and past data. It is up to you to determine where price is going to go to next. However, if they line up on multiple time frames on the higher and the lower, then that is a strong indication of your bias or what your bias should be. Now, the last one is going to be multiple confluences, okay? I've kind of touched on this throughout the video, but I want to reiterate that if you have multiple confluences on multiple time frames, if your trend line matches up with your major support or resistance levels on a higher time frame, and that also coincides with a psych level, which also coincides with a Fibonacci retracement from a swing high or swing low or swing low to swing high. You have multiple confluences to show you that, hey, based off of all of this data that is correlating with one another, price is going to either go here or here. Now, what you have to determine is that if the confluences are lining up, remember that you started off of the higher time frame. So as you work your way down, you have to keep in mind that the bias that you have on the daily is going to potentially be different than the 5 minute or the 15 minute. You have to separate the two. You have to use the higher time frame for your overall bias, right? And going with the trend. If it's in an uptrend, you should be looking for buys. If you're in a downtrend, you should be looking for sell opportunities. Now, that is not to say that on the 5 minute, you won't see a good reversal pattern, right? So you have to keep this in mind, because what will happen, and I've been there and done that so many times, right, is that you'll analyze the higher time frame, and then when you get down to the lower time frame, you either stay in a trade too long or you enter too late or too early. So use the higher time frame as your overall bias. If your daily is moving in an uptrend, then that should tell you, okay, let me drop down to the 5 minute and the 15 minute to locate good buying opportunities, right? Now, if you understand patterns, and I'm going to go into another video on, patterns and how to determine if you're in an uptrend versus a continuation versus a reversal, that type of thing. So stay tuned for that. But in the meantime, I hope this video gave you some value and really broke down how to determine a major versus minor support area. Because as you know, if you understand patterns, or even if you're an experienced trader and you understand price action, liquidity zones, and all of this good stuff, then you will know that determining where price is bouncing off of or respecting on a higher time frame, on a major resistance or support area, will really make or break your trade. That is going to give you information on if price is going to continue in that direction or if it's going to reverse, and you do not want to get caught in a reversal. It is not a good feeling to lose your money in the market based off of poor analysis. If you're wrong, you're wrong. We're going to be wrong a lot of the times, but when you're right, let your wins run. Let those runners go till they can't go no more, okay? So please identify your major versus minor support zones. On my charts, I don't even mark up minor support zones anymore. I only mark up major support zones because I don't want my charts to get cluttered. I don't want to get confused. I don't want to have my bias shift or change when I can clearly identify what's happening on the higher time frames. So any trade that I take after that on the 5-minute is going to be strictly in confluence with what is happening on my higher time frame. So I hope this video helped you. If so, give it a thumbs up, drop a comment. Let me know if this helped you on your next trades. As always, y'all, be blessed, stay healthy, and stay alive to trade another day. These markets will bless you if you allow them to. Don't try to go against where the money is going and against the banks, y'all. Trade with the banks, and once you can identify how to do that successfully, you will love trading just as much as I do. Stay tuned for the next video.